The latest economic reports offer little encouragement for recession-weary Americans. Unemployment is the highest in 16 years. Home prices have dropped nearly 1/5, the sharpest ever decline, and consumer confidence is at an all-time low. But Federal Reserve Chief Ben Bernanke offered a ray of hope Tuesday in testimony before the Senate Banking Committee.
If actions taken by the administration, the Congress, and the Federal Reserve are successful in restoring some measure of financial stability, and only if that is the case, in my view, there is a reasonable prospect that the current recession will end in 2009 and that 2010 will be a year of recovery.
Bernanke's comments help lift U.S. stock prices that have fallen to a 12-year low. But he says any recovery will hinge on the ability of the Fed and Washington policymakers to break the vicious economic cycle. To do that, Bernanke pledged to use all tools at his disposal.
To break the adverse feedback loop, it is essential that we continue to complement fiscal stimulus with strong government action to stabilize financial institutions and financial markets.
Besides slashing a key interest rate to its lowest level, the Fed is also considering expanding programs to buy bad assets held by banks. The move could lead to government ownership of some financial institutions, a frightening prospect for New York trader Patrick Casey.
The whole nationalization fear scares the investors because if they're invested in these stocks, they get absolutely nothing.
But even financial experts are divided. Some doubt the government's actions are big enough to reverse the economic slide. Others fear ever larger bailouts to financial institutions only puts taxpayer dollars at risk, just as the nation is trying to weather the worst economic crisis since the Great Depression. Milar Sega, VOA News.